Good afternoon, and thank you, Chris, for the introduction. It's a pleasure to be back on stage this afternoon for what we call in French a marronnier. And this is what our survey has become, a rendezvous for the industry, where we take the pulse and gauge the industry sentiment as the year begins with this IPEM annual survey, which is since 2019 supported by 14 national associations, and I want to thank them. They can't all of them be on stage today, but they're very well represented by Anna Gervasoni, Managing Director at IEFI, Italy, Stéphane Pech, CEO at LPEA, the Luxembourg Private Equity Association, José Zuder, Managing Director at ASCRI, Spain Caps, you changed name recently. And I'll comment and introduce you, Catherine, right after. The last two vintages of this survey really highlighted the strong resilience of private equity in the middle of the COVID crisis. This 2023 edition adds more to the resilience playbook of our industry, and we'll comment on that further with some very clear findings about the confidence the private equity industry is showing for the year to come, despite clear and strong headwinds. The results of this survey are available in the leaflet that you can find here in the room and about everywhere else at IPEM, and online as well with a more detailed document that you can download directly on our website. I must now thank you, Catherine and Alex Partners. You are our key knowledge partner. So Catherine, your partner and managing director at Alex Partners, and head of the Paris office. And you've supported us and helped us conduct and analyze the results of this survey this year. So the idea and goal of this 30-minute panel, and it may be too short, is really to try to cover the key findings of that 23 survey. And I suggest that we perhaps comment on some slides with you, Catherine. There are some very clear findings that may be really interesting to introduce to our panelists.
Thanks, Antoine. And of course, it is a pleasure to be here because we usually found ourselves inside the portfolio companies working for the private equities and the C-suite, helping to drive value creation. So it's great to be here, sort of taking some insight on our experience and from the survey. So yeah, I think it's inevitable. Every session today could not avoid talking about the economic situation, the current economic headwinds. And of course, it's inevitable that this weighs heavily on the GP's minds, right? But that reflects the mood of the world right now, so we shouldn't be afraid to kind of dive into that. I think from a GP's point of view, what we see, and we're just going to present to you a few of the findings here, but what we see, if you can see that survey, is at the top, what is really coming across is there is a triple threat here. No surprises, but it's inflation, it's interest rates, and it's slow growth. You put the three together, it's triple disruptive threat. So that makes times challenging. But I think what I found interesting in the survey is, coupled with the threat, is that the leaders are up for tackling that disruptive change. So they know agility is important. They have a willingness to invest. And what I think we see is, in a relatively short period of time over the last few years, leaders in the PEs and then what they see in the portfolio companies have adapted to disruption and how to navigate that change, which I think is quite an interesting point. We do our disruption index survey in Alex Partners, and we actually, out of that came 88% of leaders felt able to navigate disruption.
So this very high level of conviction, there may be a next slide perhaps. I think this slide tells a lot about the market sentiment right now.
Absolutely. Look, the two key things coming out of here really are, fundraising. fundraising. I'm sure some of our panel are going to have a point of view on that, but also the diminishing exit opportunities. So what we see is the GPs do have greater belief that there will be new funds created this year, and where people are on that fundraising journey, there will be capital raised. I think that's optimism, that's exciting, that's what we want to see. Our view is that there will still be a push to reduce risk, to take capital off the table as far as possible. And so I think we'll see smaller, more small-scale bilateral deals. And of course, if you can invest in companies where there is already experience and top talent, then you can use that to create growth even in downtimes, and that's got to be important. So I think there's some interesting deals to be had where that experience is there. I think the one thing, just on the next slide, is just this point about valuations. And I know a number of the sessions this morning have touched on valuations. What the survey said is that we might see this year the start to align to some historical norms in terms of historical valuations. The survey told us that actually, whether there was lots of optimism that high valuations would persist last year, this year is the year when valuations will start to decrease. But I did hear someone this morning being very bold and saying, no, high valuations are going to stay. The truth remains to be seen, but I think it's important just to see this almost flip, if you look at that chart, in what the belief is on valuations.
And if we move to the next one you have, perhaps, Catherine? What's super interesting also is that the industry acknowledges the strong headwinds, the macro headwinds we've just mentioned, but still there's a strong vote of confidence for portfolio CEOs. How do you explain that?
I think it boils down to one word. It's trust. They are trusting. Let's face it, during the last few years, the GPs have had to navigate and work out, they've grown experience in working out how to navigate unprecedented times. But they've also had an opportunity to watch the portco leaders and see how those leaders have navigated through the change. And I think that's interesting because there's a lot of conviction in the leadership in the portcos, really interesting. What I think is more interesting than that even is in the US, it's completely different. There's only 54% trust in the leadership in the US, whereas in Europe, we're very confident in our portco leadership. In Europe, it's all for us not about leadership focus, it's really about adaptability and resilience rather than, that's on the next slide. Adaptability and resilience are the key words. And I think we're more cautious in Europe. And I think that's because we're just not sure what is around the corner. So we're slightly less optimistic to say it's just about leadership. There are some other things to tackle first, like making sure we're adapting, making sure we're resilient, making sure we've got operational efficiency on the table.
I'd like to turn to the association's comments on something I started the day with, which is this stubborn optimism, or call that resilience, that the industry has. Why is private equity showing such strong confidence in its model, operating model, in its portfolio companies, in its ability to create value despite the headwinds? What's your take on that?
Sure. First of all, let me tell you that, of course, Spain is a good country to do business. Why? Because in 2022, Spain registered a new record in venture capital and private equity investment, 8,735 million in 935 deals. And of course, there is also a positive spirit for 2023, I would say, although an economic correction, of course, is expected compared to 2022. 23 will be difficult for exits and fundraising, but positive for portfolio managers, okay, and portfolio companies. Managers will be focusing in their investees companies, and there are many opportunities in startups and growth stage companies.
What about,
Yes, good afternoon, ladies and gentlemen. So we are very confident, or remain confident, because we are very proud of that value creation model that has shown and demonstrated great performance over the last years, and it should continue like that. So It is a kind of philosophy of keep calm and continue. And just as a reminder, I mean, you're all practitioners, private equity and the other strategies, they bring together the best in class of finance and also entrepreneurship and operational excellency. And when you look at the performance that was created in the past, the teams that select those deals with care and do the right due diligence processes, they have great ideas in order to make those firms stronger in the future, and that model is absolutely intact.
Okay.
Now you mentioned long term when we prepared the event. Why is long term enabling such strong confidence, you think?
Okay, thank you very much. Good afternoon. What about Italy? So we are long-term investors, of course. So value creation is our business model, and to create value, you need time. So we have many issues, of course, but we are working very well. And in the Italian context, we have a very interesting industrial and entrepreneurial context. So it's not a big market. It is a still growing market. 2022 was a very good year for us, and I think also 2023, because we can picking up many winners, and we have it in our country, and we can wait. For example, exit is critical, of course, but we don't care if we have to wait for 6 months or 1 year. And the fundraising, of course, it's a niche because we need much more money to invest in our big opportunities.
Mentioning fundraising, we may perhaps move to the slide which highlights the fundraising environment right before you, the one where you had again. Yeah. And that's this one, yes. So only 28% of European GPs would consider 23 as a good year to raise a fund. And something paradoxical that you may find in the survey results is that more or less everyone is fundraising today. So can you perhaps comment on your respective fundraising environment, especially what you hear from GPs and what you hear from local institutional investors in particular? Perhaps in Italy, do you have some particular comments on that?
Yes, in Italy it's not so easy to deal with local investors, of course, but we are working very hard also at the association level to improve this knowledge. And we have new opportunities talking about private. And private, it's not only retail, of course, it's private banking, it's family offices, and we have to build a culture of private asset, of course, in our country, and I think this is, of course, an issue also for the association.
There were some significant evolutions in Spain regarding democratization of private equity. And in the tough fundraising environment, there seems to be some high expectations towards accessing retail investors. How does that materialize in Spain to date?
Yes, indeed. Well, first of all, we're talking about the real economy, very well diversified by sector and region. Second, fundraising in 22 was a little bit less than 21, but still more than 2,000 million. And there is dry power, more than 5,000 million to invest in actual companies and new ones. Of course, the new startup law provides that carried interest shall be considered earned income and included in the income tax base with a 50% reduction. This is a big improvement. Okay, we are at the level of the best countries around us. This is a great achievement for us. And on top of that, I would highlight that the relaxation of the regime for non-professional investors in private equity entities as an alternative to the initial investment requirement of 100,000 euros. The door is open for retail investors to be able, of course, under certain guarantees to ensure their protection, to participate in funds with a minimum ticket of 10,000. And this is, I would say, a big advantage. We can talk, as you said very well, as a democratization of the private capital sector.
And this democratization has happened for a while in Luxembourg. Or, what feedback can you give about it? And so some warnings, no? You had some, I think, Stefan.
Yes, absolutely. So we are certainly interested by the democratization of the private markets and assets in Luxembourg. You highlighted that point that we already had lots of insurers in Luxembourg using insurance products in order to grant such access. We certainly have, like in Italy, also the wealth managers and private bankers who come up with very interesting feeder structures or fund of funds. That's also a very interesting product to be pushed further. And next to that, we would like to do it in a progressive manner. So not directly jump into the retail space. We would like to see first what we could do. For example, in Luxembourg, we have this famous well-informed status, which is around 125,000 euros. We would like in other EU countries, to push that to 100,000 and also build, let's say, that democratization effect around the new LTIF fund structure, which is very promising and which will certainly allow us then to mix institutional professionals and non-professional investors in the future. That was really a good step to refurbish that one. And for example, we have that Part 2 fund for those who know Luxembourg, which also allows then some bigger private equity houses to also propose tickets below that 100,000 range. And that has also started right now. So with semi-liquid and also gating options. So that's what we have witnessed right now. So it makes sense to go it and do it in a progressive manner in order also to demonstrate that this is a model for long term and also with performance, and would also certainly not like that one product like after the GFC crisis would have a bad reputation because it was forced to sell afterwards some of the assets. That is very important to keep that in mind.
So strong promises for retail investment that remain to perhaps materialize in the fundraising. There's another aspect that is quite interesting, I think, in the survey, which is how GPs and portfolio companies actually prioritize ESG and climate, especially in a context of a war, of an energy crisis, of rising inflation, etc. How would you comment on that, Catherine? And I'll let the association react to that.
Yeah, sure. And I put the slide up here, which is, you know, as I mentioned, leadership and operational efficiency are kind of key topics. But if you look here from a GP standpoint, ESG is really quite low down in that list. It's from a portfolio perspective. So in the GPs themselves, ESG is right up there with talent management as the kind of number 1 and 2 topics that the GPs are focused on. But in the portfolio companies that face the same levels of disruption, they're putting ESG further down the scale. Now, I think PEs know that if you focus on and if you distill all of ESG, climate change is the bit that pops out. And climate change and focusing on that is a key to kind of gaining access to unlocking new funds. So I do think that the private equity sector is focused on seeing climate change as a very serious matter and the need to tackle it head on. I guess my observation is when you look at portfolio companies and where ESG is sitting, we're missing a trick for the longer term. Because yes, we might not be able to afford to tackle ESG in the short term. It's seen as a cost burden. But if you think about it, economically, societally, geographically, ESG is a factor that compels companies to change. So it really is an opportunity, and it's an impact on the image of the company, the hiring potential, the retention of talent. And if you add all of those things, of course, to good economic performance and value creation, then your exit value should improve as a result. So I really do think that ESG has to be embedded into the portfolio company's agenda for the longer term future value of that company.
It's a bit as if from the top, from the LPs that probably prioritize ESG a lot, down to the portfolio companies, there's still work to
push it down. There needs to be more focus there. As somebody said earlier, this is not about having chief sustainability officers anymore. This is about embedding it into what the portfolio company does, what they stand for, their beliefs, their values. That's what generations of people who are joining these companies are expecting. so you actually can't afford not to be dealing with it in the portfolio company itself?
Every year, actually, we have a focus during this survey. So most of the questions are questions we keep asking every year, and sometimes we tend to innovate. And this year, the focus was on climate. And interestingly, the level of conviction at a personal level, at a GP level, is super high within the private equity industry. But much work remains to be done. Less than 50% of GPs actually assess their carbon footprint at the GP level. Where do you think your respective members' geographies are at that level when it comes to climate? Anna, perhaps?
Okay, so what about climate changes? First of all, it's a question of selection. You have to select companies with a potential and willing to change. Okay, first of all. Second, you have to put on your table a lot of money, because changement, it's cost. So you have to put money. And third, there is a question of competencies. So it's not so easy to understand in different sectors what is really the impact of your company for this very important changement in our lives. So it's not so easy, but I think we have a very high sensibility. And we have also to respond to our regulators about it. So there is a strong willing to change our approach in our investment about this important issue.
I would also say that it's very important and dear to our hearts and also our members' hearts. For example, the LPA underwent the process of getting a label, so in order to also be credible and walk that talk and understand what you will be kind of forced to do. We know that the directive on reporting of around sustainable finance is a little bit tricky. It's complicated, specifically in the beginning. But there again, we are optimistic that it will also bring you lots of transparency, scrutiny, and will also help the value creation model on the long run. It's a little bit like the AFMD perceived in around 2011 and 12 for those who participate to those discussions, which was really considered as a pushback. No, that will just raise costs, etc. But look where we are right now. So a very robust, mature industry, and which is now well structured and clear. So we also have the different regulatory authorities who have acknowledged the power of that, and certainly also our friends from Invest Europe. So ESG is very important. We should certainly focus on environmental or climate change, but not forget the S and G letters, which are also very important.
I would say for Spain Cap and our GPs and portfolio companies, ESG, sustainability and climate change are key factors. Okay, we are taking care of it. Something like 50% average are, for instance, taking measure of CO2 and so on. But it is not only this, we have a plan, so at least at the end of this year, more than 80% of GPs, we are taking care of it. This is not our future, it's our present. We are very much concerned about it.
Catherine, can you think of any practical example of climate project policies being implemented at a portfolio level as a value creation thing?
I don't know about exact. What we see is every project that we get asked to do with regards to ESG is different. And I think it's because everybody is still learning and navigating and finding their way through it. What I can tell you is that due diligence is now, every due diligence that we have done in the last 12 months, I would say, has had an ESG component to it, which does show it's kind of being taken seriously. Of course, if you it's obvious, right? It's a bit like cybersecurity. If you do the right analysis up front, you kind of know what you're going into, and most importantly, where you're going to invest, where do you need to invest. Because when it comes to whether it's cybersecurity or whether it's ESG, the reality is the amount of investment is infinite that you could put into it. That's no good for private equity. Of course, you've got to work out where to target your investment, where's it going to make sense through the life of that deal, just to make sure that it adds some value by the time you exit. So I think that's what we are seeing, is much more laser sharp kind of focus on due diligence, including ESG. And that to me is quite a change in the last few years.
And it's not exactly related to ESG, but when asked what's your top internal priority, GPs, as you mentioned, Catherine, reply talent management, HR, at a GP level. I know that in Luxembourg, it's something you have putting a strong focus on. Can you tell us a bit why talent is such a priority now at the GP level, you think?
Since Luxembourg is really well known for its back office and middle office specialties, we need to feed the beast. So it was very important for the providers and certainly GPs to find the right persons, including ESG, valuations, risk management, compliance, CFOs, etc. So that's why we were forced really to react, and with the team to create, for example, dedicated digital training, which we then also proposed to our different members, also to find some people from other industries and sectors, and to attract them then to private equity, for example, and created job fairs, where then also we have contacts with universities, with also some other players who would be very interested to propose some candidates, and they can do that also virtually. And finally, we have a kind of job board where then people can propose jobs, internships, and things like that. So it's very important to prepare the next generation for those jobs. It's a fantastic sector, and that's really one of the key messages we should certainly share to those new talents. So, for example, we started to do that in the greater region, so including France, Belgium, and Germany, plus Luxembourg, and that's really not enough anymore. So we need to be worldwide. We need to work on our labor laws and make visas, let's say, easy, like also, for example, like in Spain, when they push for startup founders, etc. And those are the positive things we need to do.
Yeah, private equity is probably entering a new stage, and fresh new talent will probably be key for the next years to come. Thank you very much to my panelists. Again, most of the findings of the survey are on our website from this afternoon, and there's some leaflets everywhere at IPM. There are some very interesting topics that remain untouched after this panel. For example, the image of private equity or talent that we've just mentioned, but they will be covered later this afternoon and tomorrow. So thanks again for your support to conduct this survey for you, and let's discuss that further during the next 2 days. Thank you.